I have two trade setups this week that could potentially move 20% or higher. I'm going to walk you through what I'm looking at, why I'm watching them, why I've taken positions in them, and where I think I'm going to take my profits. So my name is Chris Blom from Blomonomics. If you're watching this, you're a Blomonom economist. And this is a no hype trading channel where I'm taking a $10,000 public portfolio and showing you how I grow short-term profits into long-term wealth. So my approach is very straightforward. I trade actively. I don't day trade. I typically swing trade for short-term to medium-term positions, and I'll take those profits and then move those into long-term investments, things like growth stocks, dividend stocks, gold, Bitcoin, real estate, and so on. I've been trading now for about 16 years. I've been trading daily for about 6 years. I've made a lot of mistakes along the way. I don't claim to be any sort of professional, but I've simplified a system that has been very, very good for me for the last couple of years here. It set my family up for long-term success, and I kind of want to share those fundamentals and foundations with the community now, and just kind of see how it is digested, really. So to start, I want to make this channel accessible to everyone, whether you have a couple $100, $1,000, $10,000, 7 digits in your account. I want to just show you how I view the market, my perspective, how I enter trades, and then how I kind of take profits on these trades. Everything I do is data driven. It's not hype, it's not luck, it's not impulse. It is just watching the market and watching sort of what I call like the heartbeat or the breath of the market every single day to understand when I think there's good entry points, and I take those positions and I have my stop losses and I hope they're in profit here. So in the spirit of making this accessible to everyone, I created a brand new Google account. I went to TradingView. I set up my TradingView account. This is the free version, not the paid version. So you can only have 2 indicators on your chart. The 2 indicators I have are the multiple moving averages and the RSI divergence. Very simple. The multiple moving averages is kind of what I watch the most. So these are the colored lines you're seeing here. I have the 200-day, the 50-day in orange, the 20-day in silver, and the 10-day in gold. Feel free to copy the setup. I also have the S&P 500 here, the NASDAQ. I have some Vanguard like IT, consumer staples, healthcare, consumer discretionary, and energy to kind of follow a pulse of the broader market. I have my open positions here, Duolingo and Celsius, and then I have gold, silver, Bitcoin, and Ethereum on this chart. I've gone to Google, and I can share a whole spreadsheet with you of all these different stocks, what sectors they're in, why I picked them. I can cover that in a different video, but I created a Google watch list here of my Mag 7 to, again, get a pulse on the market, and then my roster. So rather than having to follow 4,500 stocks, I pick about 20 or so. I believe I have 22 of them in here right now that I follow on a daily basis to get a better understanding of the market. And rather than being a jack of all trades, I become a master of one. I follow a small portfolio of stocks, really try to understand them, and then that helps me better enter good positions on them because I'm very familiar with all the activity that's going on in them. So to get started then, maybe we'll give a quick lesson on where the market's kind of gone this year. So we had a really strong start to the year. We had about a 20% pullback in the S&P 500 and the NASDAQ, and then we've been on a crazy bull run ever since with both gold and stocks. We have hit the 50-day moving average here a couple times, or dipped down close to it. We almost hit it here, and then we just hit the 50-day moving average here. Same thing with the NASDAQ, very similar looking chart. So right now we have not broken trend. We have not solidified and dropped below this 50-day moving average. We've actually held a position and we've come back up a little bit. If we do drop below this 50-day moving average and start heading down, then all bets are off, all my trades are closed. We are going to wait until better positions are found. So that is the one thing. There's just bigger things at play here. So the market conditions really are, the Fed is a little hawkish right now, meaning that they've kind of alluded to cutting rates in December. The market expects them to cut rates in December, but there's a chance that they don't because we're kind of entering a point of stagflation. I can cover that in another video, but what that means is that we have inflation creeping up and we have jobs in the economy sort of shrinking at the same time. So when the Fed lowers interest rates, it usually stimulates the economy, which could raise inflation. So they're kind of in a lose-lose situation right now, and we're playing chicken with a market that could crash at any time, but for right now, it is still cautiously bullish. There's other things that have been coming out. Jobs data has been pretty poor. We have the government shutdown. At the same time, all of the Mag 7 big tech stocks are showing like very strong earnings. So it's just a very confusing landscape right now. But with that comes volatility, and with volatility, we can take a lot of advantage of this market. So I'll show you the trades I'm looking at here. So the first one is Duolingo. The story of Duolingo is that it was basically in a bit of a, zoom out a little bit here. It was in a consolidation here, meaning it was just kind of winding up in this range for almost a year. And then it shot out of it very bullish and climbed and climbed and climbed, and it went up to about $550 a stock. In this range, it was sitting at about 200 average. And then over the course of the year, it has been dropping down. Earnings came out Friday or Thursday, and the stock dropped essentially 30% in a single day. So, what was it that was on the earnings that spooked everyone? Well, they had strong numbers. They had a really good quarter. There was big growth in revenue and profit. The reason the stock dropped is because the basically company kind of told investors that we're going to stop. To summarize, we're going to stop chasing quick profits so that we can invest in more like long-term growth and user experience. That spooked everyone. That kind of read between the lines said maybe the next couple quarters, quick profits might not be there, but they're looking at actually building a big scalable system. So not necessarily the worst news, like really good numbers, but just, everyone wants quick profits, and that might not happen here in the next quarter or so. And so the stock dropped 30%. So what am I seeing here? I see this range that it sat in for, is here from basically November of 2023 to kind of November of 2024 for that year. And it went from the lows of about 172-ish, 170 call it, to highs that it hit a couple times of about 250. So it sat between 170 and 250. We now just had the market get spooked. It was already a really bad week and a half or so because of the entire market kind of being spooked here with a lot of what's going on, the factors we talked about earlier. And so it was already a down week or two, and then it just plummeted to 30%. There's just a lot of fear in the market right now. So my hypothesis is that it is probably going to sit in that range of about 250 to that 70-ish dollars here for a bit, and maybe wind up again. Either wind up to go bullish or wind up to break down and go bearish. But I think you're going to see it touch the 170 mark possibly, and I think you're going to see it touch the 250 mark maybe a couple times. So what I did is I bought in my $10,000 portfolio here. It's actually just higher than 10,000 because it was in a GIC, which is similar to a bond, and I had made a couple dollars there. It was a cashable GIC, so I took that cash and had it on the sidelines and injected it into 50 stocks of Duolingo. 50 stocks, I believe that it's going to hit that $250 mark, meaning that 50 times 50, $2,500. So I believe that this could be a $2,500 profit play. On the low end, I think it might drop to about the 170 mark. So definitely more to gain than to lose. And if it starts breaking structure below the 170s, I'll have a stop loss there and I'll sell it out. So the idea here is to buy in. On the RSI, it's showing it's a little undervalued right now. It might actually come back and fill this gap eventually, especially if the market kind of turns and goes bullish. That'll really kind of help the momentum. And I think it can come back up and hit this 250 mark. The second transaction I did is Celsius. So story of Celsius, very similar. Had a bunch of hype, had a big double top back here at about $100 a stock, dropped all the way down into 2025, was sitting quite low, at about $30. Then we had that March dip in the market, dropped all the way down to $20, and now it's been on this pretty big bull run ever since. Again, a lot of fear in the markets. We had a pretty rough week. Earnings came out. It dropped about 30%, just like Duolingo, and now it's sitting at $41 a stock. So what were the earnings? Generally beat expectations in terms of revenue growth. There was strong buzz around the brand. A lot of potential here, especially in competitive markets. Definitely like a growing brand here now globally. But they kind of mentioned to investors that their, products getting to market have hit some slowdowns and in their execution. And so there's just kind of like spooked investors again. Investors are expecting very high growth with the stock, and it kind of pulled that back a little bit. And so then everyone just decided to sell and move on to something else. Not everyone, but a lot of people. And it just dropped the stock 30%. So what I did in this position, I've been watching this stock for so long. There's so many good things that this company is doing, expanding globally into Europe and so on. And I just truly believe that this stock is at a discount right now, especially for the long term. I only had $1,000 left in the account, so I actually bought some options, some call options that expire on March 20th. They guys had good premiums on this date with $55 calls. I'm down a little bit on them right now. I kind of probably prematurely bought them, thinking that there could be a quick pullback in the market, and they actually went down another couple percent the following day. And so right now in the account, the public account, we're up about $400, so we're up about 4% in about a day. But I'm holding on to these options that could expire worthless, and that would be another $672 loss here. What I think is going to happen, and why I bought them, are a very similar reason here, is that we had way back here this wind up in the blue circle that shot and got really bullish. So it held structure there again for about 9 months, shot out like a cannon. We had this big drop back here. You like to see the big curve. That's really, really bullish. Starts going up, this big gap in the market, and basically this blue line that I've drawn here is where the bottom of this wind up it was doing, this consolidation that it was doing. So I have a very strong suspicion that it was an overreaction in the market. I've been following the stock for a long time, that at minimum we're going to go back up and test this blue line, which is the bottom of that range that it was in. Realistically, I think we'd probably come up into the middle of this range, which is hence the $55 call option, which is right here. But I bought these options, and I'm going to put the $1,000 into this winding back up towards the range of about 48. The quicker it does this, the more money we can make. We can actually exit this option contract early and maybe not hold it till expiry and just make some quick profits there. I do think the Fed is going to be dropping rates in December. I think that we aren't going to be breaking this structure in the S&P 500 and the NASDAQ. I think we're going to hold. The market's just been so bullish for so long and just got a little spooked and feared. But again, if we do break structure, we exit all trades, we take our losses, and then we look for the next position. So that's what I'm seeing this week. I would love for this Celsius position to go up quite quickly, because I do really want to sell that and make some profit. And there's another position I've been eyeing out that I really want to get in on here, and I'll explain that to you in my next video. Really appreciate you dropping in, and feel free to like and subscribe and comment on my first YouTube video ever. That would be much appreciated, and we'll see you in the next video. Thanks so much.